Good morning and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com, and we're going to take a look at the markets as we usually do at this time of the day. Before we start though, it's always need to stress that trading financial markets unfortunately is risky, and it's a risk that we lose all of our invested money as well. I'm going to share with you guys my opinion on the markets. I've been trading for many years, in fact since 2006. So I learned quite a bit over the years, and I'm a profitable trader since 2014. But even if, I actually am a profitable trader, because of the nature of the markets, there's really no guarantee that what I'm going to share with you guys is actually going to play out. But there are some tactics, of course, to sort of made it out on the right side of things, and hopefully you'll learn that by watching this presentation. Okay, good. We're gonna kick off. If you want to join me in the chat box, it's very straightforward. Just sign in with your YouTube account, say hello, like Mauricio here. Buenos dias, Alejandro, he says. Well, good morning to you as well. Or buenos dias a ti también. Yeah, let's kick off and we'll begin. And if you wonder what that language was, it was Spanish. I speak 3 languages: Swedish, where I was born, Spanish, my parents' native language, and English. And I'm based in London since 2008, so 10 years now. All right, let's take a look at the markets. And you're looking at the euro. Euro had a bit of a boost this morning. As far as I understand, there was some German data that was better than expected. And we can take a look at that right now. And it was, I think it was factory orders out about 7 a.m. Not actually sure if this is interesting. I'm quite sure the move in the euro happened at 6 o'clock and not 7 o'clock. Let's take a look. Yeah, 6:30, the move was bullish. It's interesting how people sometimes spin things. So clearly the data was out at 7 o'clock, unless this data is wrong. And the market was already up, and then people put spin on that on Twitter that the market was up on the back of this. Well, obviously, unless someone leaked it, which I don't think, it can't be it. Anyhow, we have some good data, and this is factory orders from Germany that are up with 4.4% year on year. The prior reading was a negative 0.1, and if we sort of get rid of all everything and just keep the actual data, you can see it's a nice little push to the upside. In general, in Europe and in the UK, as you know as well, we had a very soft, not a very soft, but we had a soft beginning of the year, which tends to be almost typical. We tend to have a bit of a slowdown, especially say in the US. And now, we're seeing this pick up. This is always a very leading indicator. Not sure how good it is at sort of predicting where German GDP growth is going to be at, but this is always good. It's a bit of encouraging, right? So the euro is back up on the back of that. Now, technically, this is still a sell zone, and I mean, as long as you trade below the 1853 level, I'm not going to be changing my bias. But my preference is to sell on the break to the June low, and the reason for that is very straightforward. The market. The bears were repelled from this level 3 times. So 3 times they were pushed back. And this is a bit of a sign, either the bears themselves are sort of booking profits here, or someone strong is just buying. And then sort of getting rid of dollars, I would argue. And so there's a risk you can get a bit more of a short squeeze. But technically, sort of looking at it from a big picture perspective, as long as you trade below 1853, I don't want to change my mind, and I want to remain bearish. But it is fully possible to short here. The idea here is that what if we're not right? Well, if we're not right, we'll lose 164 pip. If we are right, we can make about 181. And if we're really right, then this market is going to plummet, and we can make about 378 pip if we have the patience to keep the position for that long. And that's sort of the key ingredient of most setups that I trade. That is that I try to make sure I make more money on my profitable trades compared with my losing trades. And that has kept me on the right side of trading. Here's Bitcoin, and Bitcoin remains capped by the June 20th high. This is the 6,805 level, and we were very close to take that level out yesterday. And you know, technically we can sell here. There's nothing wrong with that. We're still capped by the high, and again, it's about those risk-reward ratios. When we get it right, we tend to get it big. When we lose a little bit, and that's again sort of the key ingredient here. Now, what is interesting, and I did publish an article about this yesterday, is you can see sort of a change in the way Bitcoin is traded. You can see here that you had a big push here at 1 p.m., another big push here at 5 p.m., and then shallow corrections, and then push. And yesterday we looked at we were going to have a third sort of a burst of bullish action. Unfortunately, we did not take out that level. But what is interesting, again, strong move, shallow correction, strong move, shallow correction. Now this is typical of an uptrend and not of a downtrend. In a downtrend, you'll see the opposite. You see, very relatively easy for the market to move to the downside, like you see here, and then sort of very weak corrective moves and very sort of sluggish. So we're starting to see a little bit of a change here, maybe the beginning of something. And if we take out this high, you know, the market could push to the upside. As well as something I shared yesterday. Actually, I shared that under news, cryptocurrencies, and which I found interesting. So this is total market cap. So the total value of cryptocurrencies. And this is daily closing prices. This is data from December all the way up until yesterday. And you can see here how market cap traded below the April low. And did that once, then moved above it, and then moved back lower again, and then moved back up again. So we need to think here, and if we think logically, if I was a bearish trader and I shorted here, I would be under a lot of pressure right now because it looks like a false move. And usually false move are maybe the beginning, could be good entry signals, just because everybody that was short sort of got out. So this is something to keep an eye on, and we're starting to see some interesting changes across most crypto coins. If I show you my list of all the top coins, a bit mixed today, but Ethereum up a bit, Ripple up a bit. Now it's not necessarily a mature sort of reversal yet, but things are developing into towards that direction. So we'll see what happens. The best way to manage is not to trade on the back of coin market cap like this, but rather what you want to do, so you break it down to for each individual market and have entry orders, stop loss orders, and profit target orders for each coin, and then you just start to see, so if one coin turns bullish, maybe the other one's going to follow, and so on and so on. Now here's gold. We had a very good setups here over the last few weeks. Said sell here, profit down here. Worked out great. Last idea was for this market to move up and look to sell here. You can see here that it overshot that level. So an indication to me, when it goes almost all the way up and almost gets the trend stopped out, is an indication of me that maybe I got it wrong. And sometimes when the market comes very close to stop loss orders, the market do actually touch them. And that's why I'm quite optimistic and suspect Bitcoin will take out its level. Now what is interesting here, I think this is probably gonna go down, and I think we'll see what happens here. But if I was short, I would probably try to get rid of that position. And instead what we're gonna do, so we're gonna leave this on here, but we're just gonna clean up this chart. Now, one thing I like to do is that when we sort of reach the profit target and we got a sort of a bullish reaction here, so it sort of indicates that maybe the market tried to form a low, instead of aggressively selling into it, and like now for example, we could technically just close out this position for a bit of a loss. And then the idea would be wait for stabilization, and then if it trades to the upside, okay, we'll turn bullish. If it breaks to the downside, okay, we'll turn bearish. And it's that downside that I do prefer. If you've been following me on Twitter, you know I've been bearish on copper. I'm also been bearishing on platinum. Let's see if I can find it. So this is an idea I shared on July 20th. Copper was trading just above 2.93, and then this is just a few days later, sell off. Platinum as well, something I've been trading, and you know, you're seeing weakness here. So this is platinum. I shorted already up here, and this is just a few days ago when the market plummeted with 5%. Since then it's bounced back. But you have these industrial metals sort of being under pressure, potentially weighing on this as well. And here, again, if we take out that low, I think that could be interesting for the move to the downside. But here, I will be more careful rather than aggressively bearish here. Here is crude, and yes, it's a daily chart. I prefer looking at this from a daily chart. I think it's going to be difficult to do anything in the short term. We did try earlier this week. That did not work out. And I'd rather just work with the big picture than the short term. Here, if you look at this, you know, bullish trend, of course, take out the high. This market can continue to head to the upside. If you look at this from a very sort of long-term perspective, below the weekly chart, you can see how this market is in a big head and shoulders pattern, like that. And this is sort of the left shoulder, right shoulder. And target is head up to the neckline. So this is $33. And then you just take this, attach it to the breakout level. And you can see here that this market could potentially move all the way up to $85 per barrel, if that is the actual target of the market, which is the target of this head and shoulders pattern. So yeah, definitely sort of a bullish bias to it, but buying up here, not a good idea. Corrective move, $70 a barrel. Maybe stops below 67.70. Probably a better idea. Okay, this is the German DAX. So the German DAX is bullish, was trying to take out the high. Actually, it did trade above the high. It's been a difficult market to trade for quite some time. There are better markets. Yesterday we discussed the Aussie stock market in this presentation, and we also I have shown you in the past other markets. I do prefer the Russell 2000, which I traded in June, and I made some good little profits on. So Russell 2000, NASDAQ 100, I think that's a better market than the DAX. But it's going to the upside. You know, you did have those factory orders from Germany. I think people were liking them. And this is also really interesting. I go to my Twitter, and I have got rid of a lot of people I was following because it was sort of crowding out a lot of the good people. But I still have, you know, some people here that I just have them on just to sort of know what everybody else is talking about. And what's interesting is that some of these guys that are good, but they're not really traders, like this, for example. Investors in cautious mode as US and China tours is set to kick off. Interesting. Published 2 hours ago. And yes, tomorrow they're supposed to kick off some trade wars, really. So that's kicking off tomorrow. And this is not sort of the only post. There are other posts. Obviously not going to find the one I need them the most, but more posts like that, and they all sort of suggest to me that maybe people are getting ahead of themselves. Or not getting ahead of themselves, but we're getting a buy the rumor, sell the fact sort of situation, where everybody's sort of getting excited about something that everybody is already fully aware of, and it's now kicking in. What's interesting as well is that I had my eye on the Hong Kong stock market. So the Hang Seng. Okay, actually that's the wrong one. See if I can find it. Actually, let's see here. So this is the Hong Kong stock market. And the Hong Kong stock market, I had my eyes on it because I actually wanted to buy it. It was trading sideways and I wanted to buy on the push to the upside. Instead, I had a break to the downside. And I could have traded this, but I didn't sort of believe, I didn't put too much emphasis on trade wars as I should have. And what's interesting here is that this market, the difference between, so if we treat this like a rectangle, gives you this profit target, so down here. And if you take this as some sort of a symmetrical triangle, then you have a slightly wider target, which is something like this. Some people are going to take the base, but I do something like this. And then it gives you this target down here. And what's interesting, at least the first target, it was touched. So we moved all the way down. Would have been a great trade. I should have traded it because I would have been able to short with a risk of maybe 1.5% to make potentially 5.6. Yeah, 5.6 return. That would have been great. But what is interesting is that this market already touched its profit target, at least the first target. It might, of course, continue to trade to the downside. You know, if you look at it from a bigger perspective, what says that it needs to stop here? Except the fact that we're touching base with the 2015 high. Not much as well. I follow the Chinese stock market because, yes, I wanted to buy it as well, but I didn't. Here as well, you have a bit of a, you had a bit of a range here. This is a daily chart, by the way. And this is China A50, which is sort of, it's Chinese stocks, Chinese mainland stocks. So here you got 1 time the range. I get a little bit more, but sort of the time to sell on the back of trade wars was up here. And if you waited, then you sold here. And this market is down now with, or was down with about 27%. So I find it interesting. And then of course, you know, you have tweets like this, sort of very obvious things kicking in tomorrow. But maybe when that kicks in, you have what we call buy the rumor, sell the fact. Or in this case, what would this be then? Sell the rumor and buy the fact. So what might happen, I'm not saying it will, but what might happen is that maybe we'll see a bottoming in these markets by tomorrow. Because if you read this, you might think, oh, I should go and sell my stocks. But clearly, smart money already sold here in January. And they're up with 27%, which is a very good move for being a stock market. So when and if this bottoms out, the way I would play it is not necessarily to buy these markets, even though it's possible to buy them. I would rather prefer sort of focusing on markets that are already bullish, and that brings back to things like, you know, Aussie stock market or potentially the Russell 2000. Okay. Oliver says, what about the live format from yesterday? Will you not keep it? So I'm gonna bring it back, but the problem with the video yesterday is that it was the video was not synchronized with the audio, and I don't know if you noticed, the background was not necessarily flowing as it should be. So I've been in touch with IT, and they're gonna provide me with a stronger computer, because I'm on a computer, it's good, but for limited stuff like browsing the internet, checking emails, writing analysis, but not necessarily for live video like that. So hopefully I should have a new computer within 2 weeks maybe, and at that point we're gonna bring that back. So good entry on copper. Unfortunately, I think here on copper, I mean, if we would bounce back, I think you probably missed out, to be honest. Maybe you didn't necessarily miss out if it's going to continue to decline to the downside, really, but I think maybe if you focus on the short term, so you load a 4-hour, maybe maybe up here around the 22.8, maybe up here, maybe in worst case 2.91, and then stops probably above 297. I'm pretty much short from here somewhere. With initial stop was up here, but I have it here now. I think what you can do to make the scheme, make the quality better here, it's not on my end. Sometimes if we have internet issues, it sort of gets blurry. But what you can try to do is that you can actually, if you click on it, you can adjust the quality here. But I can't, unfortunately. If it's my internet, then maybe that makes it blurry, but I don't think so. Could possibly be your internet, to be honest. Dollar CAD maybe making a lower low. So I think let's take a look at it. So this is dollar CAD, and I was very bullish on the dollar CAD. You might remember I even wrote articles about it on Trade Captain. So I said a break to the upside would take us higher. And then since then, I have been looking for this to move back. And I just took a simple fib. This is a daily chart, by the way. So this is the last important low at 129.47. And I took fib from this low to this high, gives you these three levels. And this is a level I identified already a few days ago. And I want to buy here rather than selling. And it's also the prior high, which makes it an interesting opportunity to potentially buy for traders. If they don't buy here, they're probably going to buy here. And so far, we're getting a bit of a reaction that I wanted. So we got a positive reaction already a few days ago, up, and then moved down lower, and now potentially pushing up. Unfortunately, and this is just the way it works, it's very, very difficult for me to say, all right, where is the stop loss going to be? So unfortunately, I just have big white stop loss orders. So most of the time, because I'm trading with the trends, I'm going to be fine anyway, because even if I say here and I have maybe a stop loss, so this is going to be 186 pip, and you might say, well, I don't want to risk that, it's too much. And sometimes what's going to happen is that, yes, I will be stopped out on the whole move, but because I'm trading with the trend, I mean, if this actually works out fine, I will in a few days be able to sort of reduce the stop loss like that. And then my effective stop loss on this position is going to be like 21 pip. And historically, what has happened is that I have been able to actually reduce my stop loss. So my average loss is, not the full 186 pip. I think it's closer to maybe 100 pip or something like that. Like pip wise, or sorry, not pip wise, but the relationship sort of initial stop loss and actual stop loss. So forget about the pips, it's more about the relation, because this is also interesting. If I need to have a wide stop loss like this, I'm not going to buy the same contract size as I'm buying if I can have a tight stop loss, right? So my effective leverage changes depending on the wide of the stop. So here I could potentially sort of lose, 186 pip. But this might just be 2% of my account. And sometimes, in copper, to give you an idea, see if I can find it. In copper, my stop loss, I was short pretty much here somewhere, and my stop loss was initially up here. So this is technically this is just 6 cents or 7 cents, but these 7 cents now equaled 2%. Okay, I think we're gonna wrap things up. Guys, I want to thank you so much for joining me. I will host a webinar. Let me see, it should be here. So I'm hosting a webinar on Tuesday next week at 6 p.m. Let me see. Maybe we'll push this a little bit earlier to probably 5 o'clock or 4 o'clock. But we're going to talk about patterns. This is a good opportunity for you guys to join. You learn a bit more about the way I trade, the patterns I trade. Yeah, we're going to push this probably till 5 o'clock, if not 4 o'clock London time. So it doesn't clash with the football. But that's happening next week. Today at 3 p.m. Nathan is holding a webinar at 3 o'clock London time. It's about the 200-day moving average and his strategy around it. Very good opportunity to learn from another professional as well. So you can check this out as well. Don't forget to follow me on Twitter. There's more of my ideas and sort of the way I trade. Here you can see the way I trade. And you can read more about this on my Twitter. My Twitter is AlexFX00. Alright guys, thanks so much for watching, and join me tomorrow at same time here at tradecaptain.com. And don't forget to hit that like button. Thanks.